Now moving on, for the first time in nearly a decade, Washington is letting Iran sell oil freely in the open market and get paid in dollars. The U.S. Treasury issued a sweeping 60-day license on Monday that's valid through August 21st, authorizing Iran's crude and petroleum exports. Payments can be made directly in dollar-denominated funds. Now, the license opens the door for the U.S. itself to import Iranian oil, something that hasn't happened in any meaningful way since the 1990s. That is a stunning reversal. Now, it comes barely a decade after Trump's own maximum pressure campaign that tried to drive Iranian oil exports to zero. Treasury Secretary Scott Bessent tied the waiver to productive talks in Switzerland, saying Tehran has committed to keeping the Strait of Hormuz open and allowing nuclear inspectors back in. But Iran has denied allowing nuclear inspection as part of the deal. Still, the market reaction for Iranian oil flow was immediate. U.S. crude fell over 2.7% to near $74 a barrel. That's the lowest since early March. Brent dropped more than 3.5%, trading near $77. Both remained above pre-war levels, and the direction is clear. Traders are pricing in more supply, less risk. Diplomacy between the U.S. and Iran has translated into relief at the pump for Americans, with gasoline prices falling for a sixth straight week and marking a 15% drop from their way highs. However, critics, including some Republicans, call this an economic lifeline for a regime Washington was just at war with. Analysts warn that the practical impact may be muted, since EU sanctions remain and China stays Iran's likely top buyer regardless. But symbolically, this matters. It signals Washington is willing to trade sanctions relief for de-escalation. And that is a sharp pivot from years of economic warfare to transactional diplomacy.